Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition, Daily Market Commentary. Hope everybody's having an amazing morning as it is October the 28th. We are rolling in to the very end of October. Election day is upon us, and we have continued our bearish moves. No super big surprise in that we had a bearish market sentiment for the last couple of days, and it has continued. So we're going to do today what we do each and every day, identifying potential breakouts and reversal trades from an educational perspective. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, all those fun things as they happen. And then there's a little thumbs up button down there. If you're watching this thing today, hit that thumbs up button. Takes you half a second. All right, let's go ahead and get rolling. So this morning in our S&P, we are down big time. We are taking it on the proverbial chin here in the U.S. as the markets are continuing to show bearishness and weakness. So I do want to ask all of you that are still short from our Monday morning level. Are you still in the position? Because that's really where true wealth is made, right? We've moved down now 100 points from the Monday high, and that was our short order on Monday, was that area right there. So if you're still in that position, phenomenal job. At this point, take your stop and move it down here. That will lock in, about 50 points or so. If you move it down to just above 3370, because that 3370 area is probably our last level. Jasmine, do we have commentary tomorrow? Tomorrow is going to be the live trade room, Jasmine. It'll be at the Traders Army website. So live trade room on our website, not here on YouTube. So this is the level that we're still looking at, as our reversal point. Now we did have this area of demand. This demand area was a confirmation level, right? And that was our confirmation level that we found earlier this week. A little bit of basing in front of it totally cancels it out, but then we didn't really get a good entry into it anyway. As prices are continuing to come down, they're going to continue to come down until we get a 4-hour area of demand. I do want to look at a daily chart, though, and see, okay, where's a daily chart telling me that there is any sort of potential for demand? And I'm wondering if we continue to trade lower, it really is going to depend a lot on earnings tomorrow from our big players stocks, right? We've got a lot of stocks that are our big players out there that we have to consider when earnings are coming into play. So the earnings that they're going to do, I think, would also play very much into what happens with the S&P and where it stops going down. So in the meantime, we continue to look for bearish opportunities when the market gives us even small rallies, right? So we had, I've got a really clean wick over wick area right here that was identified. Well, it wasn't identified yesterday, but it was formed yesterday. And then a really nice one that was created in the overnight right here. Both levels, I think, are clean wick over wick supply areas. The question I have is, are we going to make it back up into that level? Oh, interesting, Liz. Thank you. ES is retraced to 61.8% of the last move up on the daily. So let's pull that back here real quick. Yes. So looking at this move from here to here, and throw that 61.8 retracement in, and that's exactly where we're sitting right now. So good observation, good on you. I wonder if it is. I wonder where it is relative to this bigger trend. I wonder if that is. This is just conjecture here. Just below the 38.2, not quite to the 50% area. I was wondering off the most that more recent bigger move that we had back at the end of August. So, but yeah, that's totally right. So, it could be the end of the move, but I'm not betting on it, frankly, because our trend is still down. Let's continue to sell short. So what we want to start to do is to short rallies, and we'll know that the move. So here's a great question: how do we know that the move down is over? How do we know that the move down is over? Right? How do we know when a move down is over? And this is going to sound bad when I say it. When our shorts get stopped out. That's when we know that a down move is over, is when our shorts get stopped out. So what's happening this whole week on this down move? What's happening on this whole down move is that our longs are not giving us an entry because we need confirmation entries for longs. Our shorts have, when they hit entry, have been really strong, and breakout trades are still available. So you still want to start looking for quality breakdowns at this marketplace. We have some decent levels here on the 1 hour, which we've wrapped our lines around, but I don't know that we're going to come back in and retest those. I wouldn't be surprised to see us come back up to here. A retracement of about 30 points here is not unheard of, but that I think is a really strong level for a potential drop today, 3360 by 3364. Obviously, your stop still has to go above that pivot, but that I think is a pretty good little area, pretty good little level. NASDAQ. In the NASDAQ yesterday, we had a, same picture that we had talked about, that little 15-minute area. We had talked a little bit about this yesterday and said, well, if we're going to get a little bit of a bounce, let's take a look at this wick over wick area as a confirmation entry. And it actually did give us a little bit of an entry. I'm going to go to a 5-minute just to show the price movement. I don't go to 5-minute charts to look for charts, but I want to show you the price movement on a smaller time scale because it was pretty interesting. We came into the level. This activates the trade. We came back into it, and then we rallied up to here, and then kapowie all the way straight down through it. So what it showed us is that the market really did try to pull off of demand. It really did, off of this little 15-minute demand, and was just unable to hold on to it. Throughout the day. And so the NASDAQ, if I look at this on an hourly chart versus the S&P, we just pull these two markets up and put them side by side. From 10/18 to now, right? Here's our NASDAQ. Here's our S&P. Yeah, easy there, John. Easy there. Don't leave the Spanish Inquisition out of it. When I look at the NASDAQ yesterday, we saw this move up right through here, whereas we didn't have quite as strong. We did have a little bit of a move up. And when I look at from that high up here, that wick high, to where we are right now, we're down about 4.8%. In the S&P, from that same wick high, oops, wrong drawing tool. From that same wick high to where we are now, it's about 5.2%. So what that tells me is that the NASDAQ is a little bit fundamentally stronger than the S&P. Not a ton, little bit stronger. And now, why is that? It could just be the fact that there's a lot more unknown with what the NASDAQ is doing versus the S&P with the earnings that are coming due, right? So what I'm going to do is still continue to look for bearish opportunities, but just know that there's a little bit more bullish momentum, bullish sentiment to the NASDAQ. Not much, but a little bit more. So that same area that we found, that wick over wick in the S&P, is in the NASDAQ at 11,533 by 11,543. Okay, so that would be that little supply area, I think, is good for a potential reversal today inside of the NASDAQ. Now, the NASDAQ has not come below Monday's low yet, whereas the S&P has clearly eclipsed below Monday's low. In the rut, our Russell level, now we are coming to a Russell area that is a potential zone of demand, and we're basing in front of the level. So basing in front of the level, what does that mean about our level, right? I think that's the better question, is when we think about this 60-minute zone, because it is a 60-minute zone, which is typically more time period, which means more powerful, and we are sitting there just hanging out right in front of it. It's the KOD. It's the kiss of death, right? It's the kiss of death. And so I'm going to remove the level completely. I'm going to look back here to the wick over wick area for a potential reversal, and I'm going to look for a breakdown. because even though there's demand below us, I'm still going to look for the breakdown below this 1554, because that is a level where I believe that we're basing in front of the level, so I just don't think that level has a chance to hold really well. And then I think that your target would be down here around 1545. You could get an 8 to 10 point move out of there. And by the way, can you make a living in the Russell on 8 to 10 point moves? Right? You think about that. You get an 8 to 10 point move in the Russell. Can that make your day? Sure it can, right? Depending on your account size and what your goals are and what you're risking to make it, right? It's all going to be unique to your trading style, but I want you to consider that as well. And then the last one here is the Dow Jones. The Dow Jones also has that same wick over wick area. All of the markets are showing that little wick over wick area right here at the London Open. Remember, stop's still going to have to go above that pivot. Yeah, that's a good point, Liz. And so that's, but what I've tend to see and the reason I say that, Liz, is because what I've tend to see in this more volatile market is that when the S&P is giving us 8 points as return and 3 points of risk, people aren't willing to take it. And I've talked to lots of traders like that. S&P's given us 8 points on 3 points of risk. They're not willing to take it. And the reason they're not willing to take it is because it's only 8 points. I will tell you that for many, many, many traders, their goal is still 2 to 3 points a day in the S&P. They just do it on multiple contracts, right? And so when you start looking at pigs get fat, hogs get slaughtered, we've had this huge volatility for the last 8 months now. I don't know that that's going to last forever. So just keep that in mind as well. Let's see. Dennis says, I think taking the whole 4-hour area is best. Stop above the overnight high. Are you talking back on the Russell, Dennis? And you're talking this area right here, I would imagine. Yeah, I think that's a very okay level. That all the majors, right in here. I'm okay with that. What I'm trying to do is look to the 1 hour chart as my entry, and I'm really kind of refining that time frame. But I do agree, you could just take this whole level with your stop above the overnight high if you really want to, which would be on the Russell right there at 1579. All right, but overall sentiment, we continue our bearish feel in the markets in general. There are, by the way, going to be stock opportunities in this market. There's going to be stock opportunities in this market because you're going to have stocks that are outperforming the market. Do I think that this is the end of the market going up long term? No, I don't. So when we have pullbacks like this, just understand that there are still opportunities in this market with quality pullback trades. Okay? Yeah, definitely be careful. I'm not saying enter into those now. That's for dang sure. But there are opportunities for quality pullbacks. All right. Because good markets will be pulled down by the stock market in general. Now, the ones that have been leading, if we're going to look for kind of that bullish sentiment. Now, the other side to consider, though, is how much of our market's been propped up by just those top stocks. So, all right, moving over to commodities. So starting with crude oil, and then we'll talk about gold. So crude oil, we are sitting down $1.81 this morning. Yesterday, we had our crude oil level identified, and it came, right into the level, and then gave us a strong move away. Is anybody still in that crude oil level? If you're still in that crude oil level, good on you. It has moved now about $2 off of that zone from yesterday's daily market commentary. So if you're still in that level, I would say that you take your stop, you move it down to right above this wick over wick, which is our new level for today. So right above that wick over wick, which would be our new level for today. And in that case, we're looking at 38.26 by 38.47. And Vince, there's nothing wrong with that, right? Get out at the close of yesterday, and you've got some safety. I don't know that you'd have to get out at the close, Vince. The other thing you can do, because remember, these are traded 24 hours a day, so your stop is still in place. Even if you had moved your stop up to right here, you're still okay, right? You're still okay if you move your stop up to right about there. So I would say sometimes, rather than getting completely out in the futures market where there's not too much gap exposure, now there's always some gap exposure, you move your stop down and just lock in some of those profits. So is there a CL has any connection with the ES or the NQ? So really what it has more of a connection to, and both of them have a connection to, is the dollar, right? So what the dollar does is really going to help to determine what those markets do. And that's where I would say that the bigger connection lies, Jasmine, is when you look to those markets and how they connect to the dollar. So because a stronger dollar, right? If I pull up the DXY, and we've gotten a little bit of movement here in the dollar, not a ton, but as that dollar, changes, we're going to see how that moves. We're not actually seeing much movement in the dollar as it's kind of going sideways. Yeah, and I like what Dennis says there. Correlations work until they don't. I used to be really, really big on correlations up until a few years ago. But for some reason, it seems like fundamentally most of our correlations have fallen apart, right? Fundamentally, most of our correlations have completely fallen apart. And why do I say that? Well, because we don't measure the economy the way we used to. There's so many more factors that are in our economy. One of them being is just the simple fact that, these countries with fiat currencies they continue to just print money. And when the more money that you print, the more those correlations become less worthwhile. That's also a thing to consider. So, well, Dennis, it usually does have a pretty strong correlation to the Canadian, but not always. There's not always, and the more that the currencies are manipulated, which, and I'm not saying that in a negative way, right? There is a correlation where the more they're manipulated, the currencies are, the less the correlations are going to fall. So, all right. Next, gold. So look at gold. Now this is, I got to tell you, pretty dang frustrating. So we looked at this gold supply level yesterday as a potential reversal point. And in looking at this gold supply level yesterday, we got a little touch, and then we moved away, and then it came right back in and hit our stop out. Now, whether or not you stayed in it or not, or even got this order filled, is questionable because it gave us a touch and go. 1, 2, 3, 4, 5, 6 candles later, we had gone nowhere. Literally, we were right back to where we started. If you didn't get filled here, then you're basing there in front of the level and you didn't want to get in anyway. Now, the downside is that we knew this damn thing was going to fall, right? It just fell a little bit further than where we anticipated it making it through. And by the way, sometimes that just happens, okay? Sometimes that just happens. I'm going to remove this altogether because obviously that level is gone. And this is this gray line here was the line that we wanted to see for a potential breakdown in gold. And the breakdown in gold has happened, but it didn't give us an entry for the breakdown. Because we came down so hard in the overnight, it gave us no breakdown on the entry. Now, we are getting a bit of a rally. And so on the rally, let's look to a retest entry of our short somewhere up in here. Let's look and see if we get some sort of a reversal at 1892. That might actually be a candle-to-candle reversal. I'm obviously going to wrap my lines around the most obvious level here on the chart, which is 1906 by 1908. Certainly stop goes above that pivot. But that, that's always frustrating when you know it's going down. You feel it's going down. Everything tells you it's going down, and it just moved right through. So let's continue to look at this one. I think there's a chance we go down a little further because there's really clean air on that way down. And so those of you that are in that iron condor position, so I know a number of you are in the iron condor position, and we talked about going the well one too many times. I don't know that we've been to we're not, I think 1870 was our short strike on that. So just, you're getting closer to it. Just keep that in mind if you look for a reversal short somewhere up here to make some money on the way down to kind of, ease the scare of it coming below your short strike. Still very well may be okay. But I'm going to look up here for the next potential reversal. I think that's really the best trade on here now. But just keep that in mind. I was a little concerned this week about that iron condor for that particular reason. Next, nat gas. So we do see our nat gas gap. So let's talk a little bit about this gap. And I want to pay specific attention to this. So certainly there's no trade here on that as if you know, depending on the contract that you were trading. But I chart this contract for a very specific reason. Is this gap worth playing? Let me ask you guys this. Is this gap worth playing? Because that is a contract rollover gap as we went from one contract to the other. And in reality, if you're just trading the NGZ, you don't see the gap, right? If I'm just trading the NGZ, I don't see the gap at all. What we're seeing is the change between the NGX and the NGZ. But so is this gap worth playing? Sure it is. Absolutely it is. I see these gaps work a lot. It's amazing how often rollover gaps work, which is why I don't use adjusted contracts. Now, do I think that we're going to get there today? No. But I think that we could get there sometime next week on a bit of a gap fill. And yeah, I'm a huge fan of playing rollover gaps. A lot of people do not because they're using a platform which doesn't show them, but I think you definitely should. Copper, not a lot to add here in copper. I'm going to speed up a little bit because I want to make sure that I get through the currencies. I want to stop at the bottom of the hour today. And then soy as well, we saw the gap down. Remember, if you're just trading the contract itself, the ZSF21, you don't really see the gap. We do see a pretty strong move down, though, on the ZSF21 itself. So when I'm looking at soy, we had a little area here that we anticipated a bit of a breakout. Certainly, we're not going to hold that thing over the contract anyway. Well, John, I'm not saying we touch the gap now, right? I'm not saying that we touch the gap now. I'm saying that the better play is on the gap fill, right? So an opportunity to get long when price comes back to it. That's what I'm talking about, John. I'm not saying you try to play this all the way down into here. I'm saying you try to get long when price comes back to this level. That's what I'm saying. I'm not saying to play this down into here at all. I mean, matter of fact, I'd need a breakout or I'd need some sort of basing. I'm saying that there's a potential reversal on the return back to here. Same thing in soy, which we just looked at. There's a potential reversal on the play back into here, right? That's what I'm looking at is playing the gap on the reversal when it returns back to that area. Corn, we did have a corn level that was fairly clean. We popped right through that area, didn't hold one bit, not at all, nothing, nada, zilch, zipola, as we've come down hard in the overnights, unfortunately. So now looking above there, very similar to what we have in soy, although I think that soy is probably a bit cleaner of a level than corn. I would look at 412 half by 413.4. Well, 413 quarter, I guess would be. All right, so those are our commodity levels. I don't know why the ES showed up there. Those are our commodity levels for today. Let me zoom in a little bit on that so it makes the share grid a little bit easier. When I share the chart, you can see it better. And I think I plan on reorganizing my charts so that I can only show 4 at a time, because when I share the grid, it's kind of hard to see when I'm sharing 6 lines. So I'm gonna reorganize this over the weekend so that we can see that. Yeah, they sometimes will do that, Dennis, but if we get a good enough arrival, I've seen them be very effective, especially the rollover gaps. All right, so let me do the grid share on here. Yeah, hopefully I'll get time to work on that this weekend. We're almost done with baseball season. It's funny how much my life revolves around my children's baseball season. So if we have, when baseball season is over, my time frees up significantly more, and so hopefully I'll be able to get some of those maintenance things done when I've got a little bit more time on my hands. But as much as I love you all, I enjoy spending time with my boys. So, all right. But I do want to get that done. It's just not been as high on the priority scale as it probably could be. All right, next, bonds. So looking at the ZN. So yesterday on the ZN, we talked about the fact that it looked like prices were going to continue to rally up, and that's exactly what we saw. They continued to move higher. We removed a supply area for just that reason. If I look down to here, I see actually what's a pretty clean area of demand, but I don't really see any others beside that. That's really the best demand area that I look at this point in here. Not a lot of great opportunities other than that one, and even that one, when I look at that, it's not formed at a market open. It's still Globex, not a super great time of day, but also not terrible either, and could get us a decent reversal on a pullback. Now, how could we pull back to here? Maybe we pull back to here if the market gives us a rally back up this morning into our supply areas. The Aussie, good Lord, the Aussie sold off hard. Aussie sold off ridiculously hard in the overnights. Big move down. Follows gold, right? This is actually one of the correlations that's usually pretty strong, is the Australian dollar and gold. And so as I look up above on a 15-minute chart to where we might see a reversal, I'm going to come up to here as really the one that I like the most, 71.24, 71.28. The reason I'm looking at this one is, while, yes, it's a bit in the middle of the move, it's close enough to this area here, which was support. We could use this wick over wick area right here. That actually may be a decent reversal as well. But I'm going with the one a little higher because of the stronger move away for the reversal. I don't know that we're going to get back up to there. This dang thing is dropping hard. And now, by the way, we shouldn't have been in any trades on this thing. There's no reason that I was on the wrong side of it, because yesterday we'd said it's time to just not touch these currencies. Now that we're finally getting some movement, it gives us some trade opportunities. Same thing here in the euro. We did have a breakdown trade here in the euro. Didn't get the basing though. And so I'm going to look a bit higher to the supply area up here for the reversal. 1.1778 by 81 by 1.77883. So somewhere up in here would be the reversal. You do have a demand area here, which is actually still pretty clean. When I go to the 4-hour, though, I've got lower swing lows, lower swing highs. We talked yesterday about the fact that this looked a bit like a descending triangle pattern, which is what we saw the breakout from. So while, yes, we do have a demand area below, based upon our trend at the moment, that demand area has to be a confirmation. Canadian dollar, this thing, we hit the Canadian dollar yesterday, so this was our hourly level. We'd had to stop somewhere up in here. We hit the level, we hit the target, price came right back up, and then it hit the very top here, and that's where the sell-off began. So it was a good day trade to hit that first target, but then we moved really strong from there. As with all the currencies in the overnight, for the most part, and golds were selling off pretty hard. When I go to the 15-minute chart on this time frame, this one I'm going to come up to here as the best reversal. So we've got an hourly level as well as a 15 level. Yeah, stop above the pivot was definitely the winner on that Canadian dollar trade. I will say, though, that it hit my target before that, and with the market being so sideways, I had no way of anticipating this big move down. So once it hits that target, that's a small day trade. That's my thoughts on that, Dennis. Looking at the Great British Pound. So our Great British Pound yesterday on our 15-minute level, we had price came into our 15-minute zone, and then 6 candles later, it kind of went meh. Nothing, right? Just a whole lot of nothing. We did come into the level. We didn't come to the stop. 1, 2, 3, 4, 5, 6 candles later, it said, hey, you should move your stop to break even and walk away. And that's exactly was the right thing to do. Stop, once again, typically want your stop either above the candle or above the pivot. In this case, even above the pivot, you don't wind up getting stopped out. That's why we have the 6-candle rule. And anybody who says, oh, I knew this was coming, I don't believe you. No, I don't want to say that. That sounds bad. That sounds like I'm challenging your integrity. I question your judgment as to how you knew that was coming, I think is probably better to say. Because calling that would have been very difficult from a technical perspective. It just didn't set up technically for this strong of a move, right? I'm going to now look. Now, by the way, this one broke through our confirmation before giving us an entry. And so no entry on that level, which is why we use confirmations. Now we would look for a rally back up somewhere as an opportunity to get short here in the acting lately like the not so great British pound, but it is still the great British pound. All right. And then the Japanese yen, which is the last market that we typically look at each day, it's continued its move higher where everything else was coming down. It continued its move a bit higher. We're still sitting below this tweezer top area, which is, I think, going to act as a bit of resistance for a small pullback. Yeah, London session levels on the pound are sweet. I think London levels are great. All right. Let's look for the Japanese yen to come back to this hourly level. I'm going to remove the 15-minute level below because I like the hourly level a lot if we get a pullback into this region. All right. So those are my levels that I have for today. If you guys have any questions, as always, let us know. If you are interested in learning more about what we do at Traders Army, remember, tomorrow, no daily market commentary. We're going to be in our live trade room tomorrow. We welcome you to join us in our trade rooms. We do 4 live trade rooms a week, Sundays, Tuesdays, Wednesdays, and Thursdays. Some of them are in the morning, some of them are in the evening. So come join us. There's an archive to all the rooms that we do, as well as a member chat room and on-demand education. So we'd love to have you come join us. Use promo code TRADER60 to get 60% off your first month if you are interested in joining us. But that's all I have for today, everybody. If you guys have any questions at all, please send me an email, chuck.fulkerson@tradersarmy.com. I will talk to you guys soon. See ya.